Okay, so we're moving on to learning objective 3. And again, we are dealing with a manufacturer. So we need to discuss the concept of cost of goods sold. We talked about, in previous slides, we talked about product costs and period cost. And any cost that is a product cost is going to ultimately show up on the income statement in cost of goods sold. Now, for a merchandiser, we've looked at this cost of goods sold, I believe, but for a manufacturer, it's a little bit more complicated because we have the direct labor, which is a part of the product cost. That's not just an expense with a manufacturer. Those individuals who are making the product, that labor goes directly into the product cost. Okay. Same thing with direct materials, although I think that's a little bit easier to comprehend. And then the factory overhead. With a merchandiser, utilities and manager salaries, these types of things, they're just expensed on the income statement as period cost. But some of that in a manufacturing setting is going to go into product costs. So if we think about an income statement, a multi-step income statement, we have revenue at the top, then our very next item is cost of goods sold. And then we have, if we subtract cost of goods sold from revenue, we have an item called gross profit. So this is a huge concept in manufacturing. And we have here a little example. Let's see here. Now, I don't want you to get confused here. They've labeled this income statement here, but what they're focusing on, you've got some items here. When we talk about inventory, these are balance sheet accounts, but ultimately what we're trying to show you is cost of goods sold, which is in fact an income statement item. So you see up here for the merchandiser, we've got the beginning inventory plus the goods purchased, and then we're going to subtract out ending inventory, and that gives us cost of goods sold. For a manufacturer, it looks about the same. It's just that the amount of work put into each of these steps is a whole lot more. It's beginning finished goods inventory plus cost of goods manufactured minus ending finished goods inventory. Now, if you I'm referring to this as finished goods inventory, so not to scare you, but with the concept of inventory, as you know it, is about to get a whole lot more complicated. So we may have to jump around here a little bit, and you do have the static PowerPoint to help you. We have over here on the left side a partial income statement for a merchandising company, and then over here a partial income statement for a manufacturing company. We don't see any revenues here, but we do see cost of goods sold, and we've got a formula for each. We basically looked at this on the prior slide, but I want you to focus over here on the right side. For a manufacturing company, we've got our finished goods inventory at the beginning of the year, plus our cost of goods manufactured of $370,000. Now they say see illustration 14.9. Don't worry about that. I'm going to show you how we got to the $370,000. So from that we have, if we take our beginning inventory of $90,000 finished goods, this is stuff ready to sell, cost of goods manufactured, that means items that have been manufactured and are ready to sell, we can come up with this idea or this thing called cost of goods available for sale is $460,000. They just added these two. But we also have some finished goods inventory at the end of the year that has not been sold. Therefore, we subtract that out and we come up with cost of goods sold for the year of $380,000. All right. So along this, we showed you on the previous slide cost of goods sold, but embedded in this was this item called cost of goods manufactured. So let's come back over here to this cost of goods manufactured. Now this formula is okay. It's okay. It certainly helps us get everything on one slide. And this is the traditional formula that is accepted for cost of goods manufactured. And it says that we're going to take beginning work in process inventory. Well, now what in the world are we talking about when we talk about work in process? We need to kind of understand what that is. And work in process are units of production that have been started but have not yet been completed. So we talked a little bit about chairs, wooden chairs. And so I want you to think for a moment about a chair which has been started but has not been finished. So it's no longer made up of, we're not looking at direct materials, and we're not looking at a finished chair that's ready to be sold, but we're looking about a chair we're thinking about a chair that's maybe part of the way through the process. Maybe it's fully assembled, but there's a finishing or a varnishing process that hasn't been completed yet. Well, this stuff this partial inventory has a value to it. Okay, so that's what I'm talking about when I said earlier that the inventory accounts for a manufacturer quite a bit more complicated. So we see here we've got our beginning work in process inventory. This is just the stuff that was not fully complete on the last day of the prior year. Then we're going to add to that all of our total manufacturing costs for the year, and that equals total cost of work in process. We drop that down. It's the same heading here, total cost of work in process. We're going to subtract out the ending work in process, and that gives us cost of goods manufactured. Now, if you follow this through here, I want you to understand that this beginning work in process is going to be completed all throughout this. And so the only thing that we're going to subtract out is the ending work in process. Why? Because it has not been fully manufactured. I'm hoping that this will make a little bit more sense as we get into it, but I want you to understand something. This is not an easy concept to understand. If you are confused right now, that's not a problem. That's not a problem, so long as you eventually get to where you understand this. We're going to be taking quite a bit of time on this concepts, so bear with me, but also bear with yourself and make sure that you put in the appropriate level of effort. All right. Oh boy, I can hear the groans, even though I actually can't. I want to go back for a moment, and I want to focus on this item right here. It says cost of goods manufactured, $370,000. Well, this is how we actually got there. And this is our formula in place. We had some work in process. This is inventory that's not yet complete, but it has a value of $18,400. Okay. We also had some raw materials of $16,700 at the beginning of the year. Throughout the year, we purchased raw materials totaling $152,500. If we add those two figures together, we come up with $169,200. We call that total raw materials available for use. However, at the end of the year, we're going to subtract out whatever raw materials we still have in inventory because we still have it at our disposal. And if we do that, if we subtract the $22,800 from this $169,200 that was available for use, we come up with $146,400, and that represents direct materials that were actually used. So we have $169,200 that we could have used, but we have $22,800 left over at the end of the year. That means we actually used $146,400 in raw materials. Direct, let's see here. Direct labor is the next item. That's a very easy concept. $175,600 was the total direct labor that we used for the year. Okay, There's not going to be a beginning direct labor and ending direct labor. This is just what we used. It's as simple as that. Then we come over here and we look at our manufacturing overhead, and we just add up all of the various types of manufacturing overhead or factory overhead that we had. Indirect labor, factory repairs, utilities, depreciation, insurance, and we just add those totals up. Very much the same way that we do for direct labor. We come up with $54,800 if we add all of these items right here together. If we add these three totals, we come up with $376,800. Okay, that's our direct materials used plus our direct labor plus our factory overhead comes to $376,800. But wait, we also had work in process at the beginning of the year of $18,400. That, if we add that, we get $395,200. At the end of the year, just as our formula said, we're going to subtract out any work in process ongoing. In this case, it's $25,200. That gives us our cost of goods manufactured of $370,000. Not a piece of cake at all, but very, very doable. All right, so when we think about the balance sheet for a manufacturer, we don't just have an inventory account. We gave the example in class about the broomsticks, right? And we said that we had a total cost of $5 in the broomsticks. Maybe we paid $4.50 for the broomsticks, and we had 50 cents shipping and insurance, and we came up with $5. But now what we're going to do, I don't want to focus on the retail aspect of those broomsticks. Now they're using canoes or something, whatever those things are, kayaks. But I want you to think about all of the components that it took to make those broomsticks. We had some wood, we had some straw, we had some wiring. Those are raw materials inventory. So that's going to be an item on the balance sheet for a manufacturer. Then we have work in process. Looks like this kayak right here is mostly done, but it doesn't have the seat or some of these other items done yet. And then over here we have finished goods inventory. We have a fully completed kayak or a fully completed broomstick, whatever you want, okay? But we're going to show each of these categories on the balance sheet for a manufacturer. So we have another example. This is what you've been used to seeing so far over here, the merchandising company. This looks like the current asset portion. So we have cash and we have accounts receivable in both places. We have some prepaid expenses here. But the difference is in inventory. It's one line item over here for the merchandising company. But for the manufacturing company, we're going to break it down into three totals. And these are actually kind of in reverse order of how they start off. We got finished goods first. Then we have our work in process. And then we have our raw materials. We add all these up. We have a current asset total for inventory of $128,000. Okay? All right. It says, do it. Cost of goods manufactured. Following information is available for Keystone Company. All right. So we're going to look at an actual completed cost of goods manufactured here in a moment, but I want you to highlight this slide either in your mind or write it down, whatever, because this slide, number 29, is a very, very, very good slide. This is how you would actually break these items down for purposes of a test or a quiz to calculate cost of goods manufactured. We have some items here, and it says prepare the cost of goods manufactured schedule for the month. Well, what we're really going to do is we're going to take these three items right here, and we're just going to add those together, and then we're going to make adjustments over here. We've got our raw materials. If we add these three figures here together, this looks like it's $385,000. Raw materials inventory started off $12,000, went down to $10,000. So we're going to kind of mentally add $2,000, and now we're at $387,000. but work in process inventory went up 1,500. Well, we already talked about the fact that work in process inventory is inventory that's not complete. So of these materials that were purchased, we have a $1,500 adjustment the other way. So I'm guessing, and I'm not really guessing, I already know how to do this, that our final cost of goods manufactured is going to be $385,500. Our starting point's $385. Then we're going to add $2,000 because our raw materials inventory went down and was converted into finished goods, but our work in process inventory went up, so that's a $1,500 adjustment the other way. Let's take a look at it. 385.5 is the correct answer. Let's look at how we got there. We started off with our $2,500 work in process. We took our materials, our beginning materials of 12 plus 90 in purchases, that gave us 102. But we subtracted out any raw materials that were left, so we plotted this materials cost at 92,000. I told you it would go up by 2,000, and it did. See, 90,000, 2,000 more here at 92,000. Direct labor is direct labor, 75,000. Manufacturing overhead is 220,000. We add those together, we come up with 387,000 plus the 2,500 here. I know we've already done an example of this, that's okay. That gives us 389.5 minus our work in process at the end of the month of 4,000 gives us 385.5. I think you can see that if you can use this right here, or if you can, well, this is a completed statement, but if you can identify the components in the correct order, you can come up with cost of goods manufactured. I'm not going to ask you to come up with anything quite this formal, given the nature of this class, but you might be asked to do something like this and come up with that same answer of 385,500. Sound like a plan? I think so. Okay, the remainder of the slides in this chapter are your responsibility. And you will see some questions on your homework about these remaining 11 slides. But this is something that you can handle on your own, and I expect you to do so. All right? So we've got some stuff in here about service industries, the value chain, concepts of just-in-time inventory and total quality management, the theory of constraints and enterprise resource planning, as well as this concept of activity-based costing, which if we were going to do this for real would be a very, very, very difficult concept for you, but we're not. The balanced scorecard, you are responsible for that. There's some information in your chapter about business ethics and the Sarbanes-Oxley Act. I believe you will need this for your homework, and some information on corporate responsibility. Okay, that is the last PowerPoint video for chapter, whatever chapter this is, on managerial accounting. Good luck. Email me if you have any questions.